Thank you, and good morning, ladies and gentlemen. Welcome to our quarterly monetary policy report press conference. The third local wave of the COVID-19 pandemic appears to be receding, and with it, some of the government mandated restrictions. These developments should support increased economic activity, which already is showing some strong positive signals in the form of rising employment levels, buoyant inflows into the foreign exchange market, and strong reserves. The outlook for inflation, however, remains a cause for concern. With this brief background, I will now speak in further detail to the bank's latest monetary policy decision. Since the previous meeting of the MPC, when the policy rate was increased by 100 basis points to 1.5%, and other supporting measures were implemented, we have seen Jamaican dollar liquidity tighten, market interest rates rise, and lending rates have either increased at the margin or banks are planning to increase them. However, inflation expectations, as measured by our surveys, remain elevated and of concern. The MPC met on Thursday and Friday of last week and voted unanimously to further increase the policy rate by 50 basis points to 2% effective Wednesday of this week. The committee also decided to maintain other measures to contain Jamaican dollar liquidity expansion and reiterated that while not targeting any specific level of the exchange rate, Bank of Jamaica will continue to ensure that movements in the exchange rate do not threaten the inflation target. Finally, consistent with meeting its inflation target sustainably in the medium term, the MPC agreed to consider further increases in the bank's policy rate and to maintain or intensify the accompanying measures at subsequent policy meetings until inflation expectations are reduced and consequently the inflation outlook is solidly within the bank's target range. This measured approach to monetary policy adjustments is consistent with international best practices and is designed to ensure that in the context of the recovering economy, the bank deploys the least possible disruptive policy adjustment to achieve its objective. It is important to emphasize that at current levels, real interest rates remain negative and are a significant impetus to economic growth. The increase in interest rates, along with other measures, will cause market-based interest rates to rise further, which will make the returns on Jamaican dollar savings more attractive relative to spending, and borrowing in Jamaican dollars will become more expensive. Combined with the tightening of Jamaican dollar liquidity that is available to banks, these measures are intended to temper the demand for foreign currency and hence moderate the pace of depreciation of the exchange rate. The measures will also reduce demand in the economy and with it, the abilities of businesses to pass on price increases to consumers. Let me now go into more detail about recent developments in the inflation numbers and the inflation outlook. As we are aware, the inflation rate for the 12 months leading up to October 2021, as released on Monday by the Statistical Institute of Jamaica, was 8.5%, representing the third successive month that inflation has been above the bank's rate, the bank's target range, I should say, of 4 to 6%. The MPC has written to the Minister of Finance and the Public Service, as is required by law, to explain the causes of the breaches the measures that have been taken by the bank to restore inflation to the target range, as well as the short-term outlook for inflation. The truth is, large increases in international commodity and shipping prices have been the principal contributor to domestic inflation, making it rise above the target range. In addition, there were significant upward price impetuses from sharp increases to agricultural prices and one-off increases in regulated transportation and energy prices. These shocks have led to elevated inflation expectations and second-round movements in the prices of goods and services, for example, rental rates. The MPC's decision to further reduce the level of monetary policy accommodation is designed to limit the second-round effects of these shocks. Going forward, the MPC anticipates that annualized consumer price inflation will continue to breach the upper limit of the bank's target range over the next 10 months until between November of this year to August of next year, and is projected to peak in the range of 8 to 9% over this period. This inflation forecast reflects the continued impact of higher international commodity and shipping prices on domestic processed foods, services, and energy price inflation. Past agricultural food price increases and increases in regulated transportation fares and the electricity tariff will also support higher inflation over the next 10 months. With the tightening of monetary policy, we anticipate that headline inflation will return to the 4 to 6% corridor in the latter part of 2022. The near-term risks to the inflation forecasts are skewed to the upside. The main upside risks which could cause inflation to be higher than projected include higher than anticipated pass-through to domestic prices from international commodity prices and shipping costs, and continued shocks to the supply of agricultural food. Additional upside risks include higher than projected inflation expectations, which could impact price setting behavior, further increases in regulated prices, and higher than expected GDP growth, which will drive increased demand. On the downside, a strong recovery in agricultural production could support lower food prices in the short term. Let me turn my attention for a minute to developments in the foreign exchange market. In relation to this market, as at November 17th of this year, the exchange rate was 156.79 Jamaican dollars to $1 US, representing an annual point-to-point depreciation of 6.1%. This is broadly similar to the pace of depreciation that occurred over the same period last year. Bank of Jamaica is of the view that at the current levels, the exchange rate is fairly valued and the prospects are for a stable market. Foreign currency flows continue to be healthy, and businesses and individuals in Jamaica who require foreign exchange have been able to access it. For the calendar year to the 17th of November 2021, the daily purchases of US dollars by authorized dealers and cambios averaged approximately US $36 million per day, higher than the average of 31 million recorded over the same period last year. At the same time, daily sales to end users averaged close to 35 million, higher than the 27 million occurred a year ago. Bank of Jamaica has nonetheless continued to intervene in a market when temporary shortfalls between inflows and outflows occur. total BFIXIT flash sale operations and direct sales to the energy sector for the calendar year to the end of October has amounted to $675.4 million US dollars. At the 17th of November this year, Jamaica's gross international reserves were substantial, amounting to $4.7 billion US dollars and representing the equivalent of nearly 144% of the level considered adequate. Looking forward over the next 2 years, the bank projects that gross reserves will continue to remain healthy. This will be supported by a current account deficit of the balance of payments ranging between 1 and 3% of GDP, a very sustainable level. This reflects the earlier mentioned expectations for a recovery in tourist arrivals and spending. Ladies and gentlemen, you may be aware that in January of 2020, one component of the bank's net open position, NOP, regime in the form of a 8 billion Jamaican dollar cap was temporarily removed. This adjustment to the NOP regime facilitated greater liquidity in the foreign exchange market, especially during the height of the pandemic. The bank has assessed the impact of this removal and concluded that the system is better served by the reinstitution of the cap, as it helps to constrain excessive volatility in the exchange rate. Therefore, effective the 6th of December 2021, the cap will be restored and will be adjusted from the 8 billion limit to one corresponding to 4.5 billion for the long NOP positions and 7 billion for short positions. The bank continues to commit to reviewing these limits annually and to amending them if necessary. Looking at the outlook for the Jamaican economy, the most recent real GDP data published by Statin indicated that domestic economic activity expanded by 14.2% for the June 2021 quarter, compared with a contraction of 6.7% in the March 2021 quarter and 18.4% a year earlier. This outturn represents another in a series of improvements relative to the previous quarter. The labor market also continues on a path of improvement. The latest data released by Statin indicated an unemployment rate of 8.5% at July 2021, down by 4.1 percentage points compared to the rate at July 2020, when the economy was experiencing the early stages of the pandemic. Indeed, the economy is just shy of the pre-pandemic unemployment levels, with the rate at July 2021 standing at just 0.1 percentage point above the rate in July 2019. Real GDP growth for financial year 2021 to 22 is projected to remain within the range of 7 to 10%, before moderating in a range of 2 to 4% for financial years 22 to 23. And this is because of the impact of stronger than expected improvements in the economies of Jamaica's major trading partners. The key drivers of this rebound are, of course, tourism and related sectors. Notwithstanding the outlook for continued growth, real GDP has been adversely impacted by a temporary disruption to production at Jamalco, as well as the recent adverse weather conditions. However, the bank anticipates higher growth in the manufacturing, distribution, and the transport, storage, and communication sectors. The risk to this growth are balanced. A faster pace of growth can arise from a stronger rebound in tourism and related sectors, given the pace of vaccination in source markets and the pent-up demand for travel that exists. The main downside risk to growth, however, relates to the emergence of new variants of the COVID-19 virus and the accompanying measures to control it. If Jamaica's stringency measures are tightened and protracted, this could influence a slowdown in travel and disruptions in the production and distribution of goods. Let me turn for a minute to the financial sector. Looking at the financial sector, deposit-taking institutions' balance sheets remain robust, adequately capitalized, and in compliance with prudent liquidity standards. The pace of loan growth, while remaining positive, has continued to slow due to the moderating impact of the pandemic. The stock of private sector loans and advances recorded year-on-year growth of 7.9% at August of this year, compared to growth of 16.5% at February of last year, just before the crisis. At the same time, non-performing loans remain well below our threshold for concern and continue to be fully provided for by the system. Let me conclude, ladies and gentlemen. I wish to affirm Bank of Jamaica's commitment to fulfilling its mandate of ensuring that a growth-enabling macroeconomic environment is in place. This environment is characterized by inflation returning to and remaining within our inflation target range of 4 to 6%. The outlook for inflation over the next 2 years, while being initially affected by external shocks and from rising international commodity and shipping prices, is also at risk from rising inflation expectations. Bank of Jamaica's policy actions to further reduce monetary accommodation continues to be aimed at controlling this rise in inflation expectations and influencing a return of inflation to our target as soon as possible. It is important to emphasize that through these actions, Bank of Jamaica is working to protect all Jamaicans, those on fixed salaries, those in the informal economy, those in businesses, and not for any specific sector. The bank will remain vigilant, closely monitoring the economic environment, and stands ready to take further actions at subsequent policy meetings in order to achieve our inflation objective. Thank you. I will take questions.
Thank you, Governor. If anyone has any questions, please type your questions in the chat feature or use the raise your hand feature. Please go ahead, Al.
Hello, good morning, Governor.
Morning, Al.
Governor, in September, you talked about the importance of really suppressing inflation and keeping it within the band. And I couldn't help but notice that both you and your team were pilloried for that by so-called experts and a large part of the media. Subsequently, here we are today. Inflation is ratcheting up, not just in Jamaica, but in developed economies right across the world. I'd like to read you something from former U.S. Treasury Secretary Larry Summers. He says that if price stability is lost and inflation accelerates, sooner or later, the consequences will be a severe recession that will hit the poor and middle class hardest and undo recent employment gains. in your opinion, do you think that the impact and the rise of inflation is being discounted here in Jamaica? And is there something you can possibly do to really draw the importance of this measures you're taking to keep it within the 4 to 6% band?
Well, I'll thank you for that quote from Larry Summers, who is speaking about the American economy, of course.
Yes.
And that's an economy that has had decades of low and stable inflation. So that is ingrained in the American economy, in business culture, and in the public psyche. In Jamaica, that's not the case. Actually, it's the opposite. And save and except for the last 5, 7 years, we have had a history of very high inflation that has been very destabilizing to growth. So in Jamaica, we have a lot to protect, much more than in the United States, in the sense that our history is more one of inflation than of stability of prices. And, memories are short, but we can just as quickly get back into a cycle of upping prices. Wages go up, prices go up, wages go up, to the point where things get out of control. Better that Bank of Jamaica move early and try to cut down on expectations, inflation expectations, than for us to be late and find it much harder or impossible to retrieve price stability. So I'd rather be criticized for moving early than for moving late and losing a game. To point out, there are dozens of central banks across the world that have started to tighten monetary policy. And some of them are in economies that are pretty close to being developed. So it's a trend, and it's going to happen in the United States very shortly also.
Thank you.
Thank you, Al. Please go ahead, Keith. Mr. Callisto, we're not hearing you.
Question, a follow-up to that, I guess. Have you done a study of the ratio of imported inflation to external inflation? That's one. And
Sorry, I didn't
and how
understand
much
that.
weight,
Imported to?
in other words, internal. In other words, what is coming from stuff that you have no control over, such as commodity, shipping prices, and so on, versus internal. Now, I know there's a second round impact to that, so maybe that's part. And then the second question is the rental. How much weight are you giving to what you call second round impacts in terms of your analysis? You mentioned rents. I mean, I have a couple more, but maybe I should leave you there.
Right. So rents today in August, those jumped 10%. Here is a service that has nothing to do with imported commodity prices, shipping prices. It's a second round effect. And it may be one of the first, but there are more to come. School, education, those prices have gone up. You may hear doctors up in their prices. And then when you go to wage negotiation, you get increases there also. Keith, it's a common sense thing to understand that if inflation is initially imported, there will be knock-on effects, second round effects. And that is what we are aiming to tamper down by moving interest rates, which makes consumers want to save more rather than spend, which makes borrowing more expensive, and which kind of quietens down the the economy and take a little bit out of the demand in the economy and make it more difficult for prices to move. Fortunately for Jamaica, I should say, a lot of the economic growth that we expect to continue to take us out of this pandemic has to do with tourism, and none of our actions is going to adversely affect that aspect of the economy. So we're almost in our sweet spot for the Bank of Jamaica to do what it's doing. We expect to see economic recovery because tourism is going to drive that. That has nothing to do with local interest rates, but by raising interest rates locally, we expect to dampen down second round effects on inflation and keep high inflation at a pretty short period, so that at this time next year, hopefully, we can say we're back within the corridor. I want to ask Robert Stennett if he can say something about what you call the ratio of imported inflation to total inflation, and bring in there the issue of expectations.
Yes, thank you, Governor. Good morning, everybody. The answer to Mr. Callister's question about whether or not we study this thing is yes. I can share with you some statistics for the data on inflation at September. I mean, October just came out. So we haven't updated our analysis for that yet. But what we did was we broke inflation, that 8.2% inflation rate, into the various sources of the shocks that we experienced. There were about 4 or 5 shocks. One was grains, the rent prices that we mentioned, energy, the agricultural shock consequent on the bad weather that we got in August, and there was regulated changes in transportation prices that was announced by the government. When you aggregate the impact of those shocks, you're looking at about 60%. Under 60% of the 8.2% was due to those shocks, which means the other 40% is really underlying inflation, counted as the difference between headline inflation and those shocks that we just enumerated. And then one key point to highlight is that even that measure of underlying inflation is still higher than it was a year ago. So while the shocks contributed a significantly large proportion of the inflation outturn, it still does not, or they still do not fully explain the fact that underlying inflation is picking up. BOJ's study of the issue points to a very strong correlation between shocks and inflation expectations. And inflation expectations manifest themselves in a wide variety of forms, the most common of which is simply a businessman deciding to price their selling goods at an exchange rate which is some margin above spot rate, to hedge the potential loss that may come if the exchange rate depreciates faster than they are anticipating. But expectations, as the governor pointed out, also encompasses price setting behavior in the labor market, and it involves those other producers who opportunistically pass on price increases in a context where they believe that everybody else in the economy is passing on price increases. So the issue with shocks is that while they tend to be temporary, they tend to also have a long-lasting impact on expectations. And if we do not react, it's going to be like an avalanche. What we're seeing now is simply the first movements of those snowflakes moving downhill, but without a significant effort, both policy related and communication, to staunch this avalanche, we're going to be in problems. So there's this dynamic that the BOJ is watching, and we are very, very proactive in addressing the issue. Thank you, Governor.
Thank you, Mr. Stennett. We have a question from Huntley Medley. Governor, can you comment on the call by the IMF for further tightening of monetary policy in Jamaica when the UK, Eurozone, and US have not yet raised interest rates?
Yeah, well, I mean, I thought that I, in part, addressed that when I spoke about the United States and Larry Summers' comment. But let me say again and ask Wayne to contribute also. The situation that we find ourselves in is that we have a history of high inflation, a history of businessmen and price setters generally, whether you are in the wage market or on the other side of the table, of protecting themselves by having expectations of inflation that create that avalanche that Robert speaks of. Not so in the United Kingdom so much, not so in Canada, not so generally in the kind of developed economies. And so they have a little bit more room to play with. We don't feel we have that room. We have a feeling that if the door is left open too long, we won't be able to catch whatever it is that is running through the door, inflation, whatever animal that is, that it will get away from us because we have this history of high inflation and high inflation expectations. The United States is a bit different to that. Wayne, can I ask you to make a comment?
Right, thanks, Governor. Good morning, everyone. I think I just want to underscore probably 2 points the governor made. In those countries, inflation expectations are pretty much, very much well anchored or low, which is not the case in Jamaica, as the governor pointed out. But also, although those countries have not raised their signal rates, the US in particular have begun to remove some of the monetary accommodation that it has over many years. So it has actually begun the tapering process. It expects to continue that tapering process into or complete that end of that tapering process by the middle of next year. So those central banks are also concerned about inflation and are also adjusting their posture. We, because of our situation, as the governor stated, we face a history of high inflation. We face a situation where inflation expectations are running way ahead of our desired range or target. So therefore, we cannot wait. We have to act. The other thing as well, I think most analysts and markets are generally expecting, certainly over the next 6 months, financial conditions to tighten globally, which means market rates globally may also rise as well, even in advance of any change in the central bank's interest rate structure. So we also have to be mindful of that, and we also have to be trying to be ahead of that. What we're essentially trying to do is to get ahead of the curve before the avalanche happens.
Huntley, can you imagine? In April of this year, Bank of Jamaica becomes independent central bank and is given the mandate to price stability. The minister and the government says, guys, if you do one thing well, I want you to be the price stability agency of Jamaica. And 6 months later, we fail to move against inflation expectation. And in another 3 months, inflation starts to spiral out of control. What would people say? The very same voices that are talking out against the 1% and 0.5% movement in our policy rate, those very same people would be criticizing the central bank for not being more proactive. So we have a call to make, and I very happily made that call. We here at the Bank of Jamaica, the Monetary Policy Committee, says it's time for us to move. We can't allow this to continue. Let's move early. We don't have to be too dramatic. We don't have to move interest rate by 300, 400 basis points. Let us move it incrementally and signal to everyone that we are here watching and we are prepared to act again if we don't see expectations come in line. And you may ask me too, how do we measure expectations? We measure it with a survey. We actually go out there to hundreds of price setters and we ask them, what is your expectation of prices of inflation in the next 12 months? So this is not a survey of anecdotes. This is a survey done professionally by an independent agency. And the results that we get says that inflation expectations are outside of our corridor of 4 to 6%.
Thank you, Governor. Dashan Hendricks, can you go ahead with your question, please?
All right, good morning, Governor. Both you and Senate seem to not hint at, but point to the second round effects of, you're not hearing me properly?
Yes, we're hearing you.
Okay, the second round effects of the inflation that we're having now and the impact expectations could have on second round effect of inflation as well. And the Senate even explicitly spoke about prices in the labor market. How concerned is the BOJ that this will begin to impact the inflation, this being inflation that we're experiencing now plus expectations? How concerned is the BOJ that it may begin to impact prices in the labor market?
Well, good morning to you, to Dashan. Of course, like everyone else, we know what the situation is. We know what our recent history has been, and everyone would be concerned. I think it's just a natural thing. I'm sorry, Dashan, am I addressing your question properly?
No, I was expecting a bit more than just saying. It almost seemed, the answer seemed like it's in a casual passing by where you say, okay, it may impact prices in the labor market,
No.
but
No, actually, what I'm saying, Dashan, is that I thought it was self-evident that if inflation continues at this level, and if expectations continue to be outside of our corridor, it is natural that persons at the bargaining table are going to be more aggressive in what they're asking for. I mean, to me, that is like night following day.
all right, let's put it this way. Do you expect the prices in the labor market to begin to be impacted if the BOJ doesn't act quickly enough? And how long of a time horizon before you start to seeing them? Given that most companies, including the government, have settled some of their bargaining agreements so far. What time horizon do you believe whereby the BOJ doesn't say bring inflation under control before they say, hey, this thing is not transitory? And because people are saying how transitory is transitory in terms of the inflation we're seeing, and then you at the Bank of Jamaica saying you may bring inflation down within your target range by end of next year. The IMF is saying it could go to end of 23.
Dashan, I can't predict with precision what the labor market may or may not do. But our prediction is that inflation will come back within the 4 to 6 corridor, 4 to 6% corridor by about September of next year. That's the best we can do. How people deal with the period between now and then, I can't predict. I can just say that our model indicates it should come back down to 4 to 6 if if Bank of Jamaica continues to be determined in doing what it can do to manage expectations. If Bank of Jamaica steps out of the situation and allows it to run, we don't know where that inflation will end up.
Let me be cheeky. Sorry, Al. Let me just be a little cheeky, and if the governor answers also. The models show that inflation will come within the range by September. That's the third quarter next year. The model is fed with variables to determine the outcome. In terms of, and I'm being really cheeky, what level of interest rates does the Bank of Jamaica see itself moving what kind of rate the Bank of say policy rates being moving to bring inflation within its target range? And I say I'm being cheeky.
Well, I don't need to say anything. Dasha, you have said you're cheeky, and you are cheeky. I can't comment on that.
Yeah, you won't comment on that.
No, I can't. I can't. Even Keith is chuckling at that. And Al.
Thank you, Governor. Al, could you go ahead with your question, please?
Nice one, Dashan. Governor, I want to ask you a question as it pertains to remittances. I don't know if you saw the World Bank earlier this week was basically saying that remittances for the Caribbean, that is, well, worldwide will go up, but for the Caribbean at about, say, I think, was it about 8%? About 8%. But what are your feelings? The last time I saw remittances for Jamaica, the numbers were down, the inflows, and remittances seem to have been a lifeline for us during COVID. But if you're in the United States, UK, Canada, and with this inflationary impact, the likelihood of you sending money back home gets reduced. What do you see there? How do you see it?
Let me ask Natalie Haynes, who is with us, to comment on that. As you know, Natalie is our Deputy Governor in charge of that aspect. Go ahead, Natalie.
Thank you, Governor, and good morning, all. Just to clarify, though, Al, for us, we are not seeing remittances going down. Just to give you some numbers, I saw a question also in the chat from Douglas McIntosh, so I think I could just answer that as well. For this year to October, from the remittance companies, the total inflows was approximately 2.5, and when you compare that to last year up to October, it's about 2. So remittance, we have still seen a growth in remittance, not as much as we saw last year, immediately with the onset of the pandemic, but flows are still higher this year.
Yes, the World Bank is saying that flows will be higher, I think, for next year. But the only thing I worry about is the inflationary impact, and I'm seeing it. If I'm sitting in London and I'm thinking, hey, I'm sending money home to Aunt Teresa in Westmoreland, and it's costing me more to go to Sainsbury's, how do I make that happen? Do I send less home? Or that's what I'm seeing, you know?
Right.
So yeah, that's really what it is.
Right. And there are a lot of nuances from various points. I mean, we have a different story coming from Cayman, where most persons are sending home their funds in anticipation of returning to Jamaica, because Cayman is still under basically a lockdown, and most of them are not employed, and they would rather be here at home in Jamaica unemployed than in Cayman. So they have been sending back funds, and we have seen that corridor increasing since about last month. So for each corridor, it's a different story, but we still see increases from the US, our main source, and the UK.
Okay.
Yeah, so I mean, what you describe is possible, that inflation starts to erode the ability of a Jamaican in London or in New York remitting. That's possible. What we hope for is that, you know, it stays at the higher level rather than go back down to the 2 billion level. We certainly hope so. It's been of tremendous help to the country.
Yes.
Thank you, Governor. We have another question from Huntley Medley. Was BOJ wrong in its initial estimation of the transitory nature of inflation, with even international inflation conditions continuing beyond what was originally expected? He's specifically referring to oil prices and logistics issues.
I think generally economists thought that international commodity prices would come off quicker, oil in particular. And we're finding that while some prices are coming off, grains, for example, energy prices for peculiar political, economic reasons have stayed high. And that has caused a lot of economists internationally to second guess whether high inflation is going to be, temporary as we think or hope, or if it is going to be a little more prolonged. Wayne, you want to comment on that issue?
Yeah, thanks, Governor. Yeah, I mean, we have seen some reversion, some moderation in some of the commodity prices, but they still remain elevated. So there's still a debate now of, among economists, among central banks globally, about just how long this effect will be. I think it's fair to say that we certainly did not anticipate how long and how deep the supply chains problem would be. But I think there's a more from an emerging consensus now that it is going to be longer than we had initially thought.
Thank you, Dr. Robinson. If there are any further questions, could you please feel free to unmute your mic and ask, as the chat feature is not currently working on my laptop.
All right, if nobody has any question, I will go, but I'll yield first.
Melanie, I think there were 2 questions from Douglas McIntosh in the chat.
Right, that's why I'm asking for...
Oh, I don't know if he wants to ask them or you wants me to ask them.
Mr. McIntosh? Mrs. Haynes, could you read it for him, please?
All right, so I answered the one on remittance. He had asked about the remittance inflows to date relative to last year. He wanted to know the total reserves at this time. At the end of October, it was 3.9 billion, and we expect stability for this month. He also wants an update on Cbdc implementation. All right, let me take that, Governor.
Sure, Natalie.
So still in the pilot, and that pilot is going to continue until the end of December. NCB is currently the only commercial bank that is testing in the pilot. And they have developed their wallet, and they have begun testing in earnest, first of all, with their staff, what they call friends and family. And then they're going to roll that out before year end to other account holders, mainly individuals and small merchants such as vendors, hairdressers, barbers. And they will be doing testing in terms of person to person and person to business in the form of these small merchants. In addition, they're also going to be testing cash in and cash out at the ABMs. And of course, importantly, BOJ also has a wallet that it has developed for its staff. And in the middle of December, we plan to test the interoperability between NCB's wallet and Bank of Jamaica's wallet, because that's an important component of any CBDC, for there to be interoperability between all wallet providers. National rollout is expected to start first quarter of 2022. And by that time, we are hoping that other banks will come on board in terms of issuing wallets. So that's the update that I have so far.
Thank you so much, Mrs. Haynes.
You're welcome.
Are there any further questions?
Yeah,
All right.
Dashan had some.
Yes, concerning the Article 4 consultation with IMF recently, and they released that they have so far sent out with their concluding statement. One about supervision of financial conglomerates needing to be strengthened, and talking about the risk that arise from concentration of ownership, related party and large group exposures, and off-balance sheet positions, and even saying that even when there is proper separation between non-bank and bank subsidies in a group, both direct and indirect exposures could be a source of contagion. Governor, can you or any member of your team comment a little further on that and what the Bank of Jamaica is doing as the super regulator to fix issues that have been raised there?
Yeah, thanks, Dashan. Good question. Because we just closed off Article 4 meetings this week. Can I ask Maureen Sims, who is with us here, to comment on that question?
Thank you, Governor. Good morning, everyone. So Dashan, several years ago, starting with the Banking Services Act in 2015, we started the journey to do what we are calling in Jamaica conglomerate supervision. Last year, the Parliament passed the licensing rules for financial holding companies. So, and since this year, Bank of Jamaica has started the process for licensing financial holding companies. We have licensed one so far, and we are processing other applications. Now, once that regime is fully implemented, financial groups will be required to hold capital for the risks right across the groups. That is, securities dealers, insurers, any other financial entity that is within that group, the financial holding company will be required to hold capital for the risks that those subsidiaries take on. The financial holding company will also be responsible for managing the risks of the group, right across the group, looking at all the exposures, including off-balance sheet items for which they have fiduciary responsibilities, and ensure that appropriate risk mitigants are in place for those risks that are uncovered. We're also working on a special resolution regime that will put the onus on the private sector for funding resolution once that resolution regime is in place. Recall back in the 90s, the cost of resolution, the public bore that cost. The framework that we'll put in place, or we're planning to put in place, the funding for that will be on the private sector. And we intend, once we start the framework is now being developed, and we intend to do further consultations with the industry as we progress with the development of that particular framework. But the idea and what the IMF is pushing is that Jamaica needs to urgently put in place a framework to understand conglomerate risks right across the groups, and to ensure that those risks are being appropriately managed to minimize financial instability. Governor, if Dashan has any more questions, I'll take them.
I think listening to you, I'll have to take the questions in a phone call and give other people a chance to ask other questions, because I don't know the level of interest the other journalists may have in this topic that I'm looking at, and I don't want to belabor them trying to get in other questions. But I can make a phone call and see if I can get more clarity to write properly.
Right. I will also say, just adding that the FSC, Financial Services Commission, they are in the process as well of putting in place a consolidated framework for entities or groups that do not have a bank within those groups. So both regulators will be implementing conglomerate supervision.
Okay, all right then, cool. Thanks.
Uh, can I say something?
Sure, Al, go ahead.
Hi, I thought Dashan made a very good point. Can I defer for a little while? Because I think it's a point of concern, and I think Ms. Sims made some very good points there. I'm going to put it out there, but you can see a lot of interconnected entities. If something happens, we all know what happened 25 years ago. I think it's a very important matter. So, Dashan, if you really want to expand on it a little bit, I can just come in after you. So, go ahead, Dashan. But it's a very important point you make.
All right. One of the things I'm listening to the policies that are being put in place in terms of getting financial entities with non-bank and bank operations together in a conglomerate. In terms of what the IMF is asking the bank. Okay, sorry. In terms of what the IMF is asking the Bank of Jamaica as a super regulator, and I think a lesser extent, correct me if I'm wrong, to the FSC as regulators of securities, but the BOJ is still the super regulator of the financial system in total. Sorry. And they are saying that, are you saying that the measures that you are looking at right now are adequate to at least manage contagion risk that may come up between banking and non-banking members of a financial group?
Yes, that's what we're saying, because one of some of the mechanisms that we use in conglomerate supervision, for example, is looking at network analysis that look at the interrelationships, the interconnectedness of all players within the financial system, not just DTIs, but DTIs and their counterparts. So we look at the entire network in a transaction and look for interconnectedness and look for risks within those areas. So that is part of the work that we're doing, using network analysis and big data to help us to understand the risks across groups. So yes.
But what about the regulation of some of the large groups with headquarters based in other jurisdictions, and with different oversight practices and cross-border and financial sectors that are linked to other entities, especially those that don't have their headquarters, their group headquarters here in Jamaica?
Okay, that's a very good question. So Jamaica has a very few large groups, right? And they're either headquartered in Jamaica or for the most part in Canada, where they are regulated by OSFI, the home supervisors. Right. Jamaica is home supervisor for one of the largest financial groups across the region, that is NCB. And so we coordinate with other regulators across the region in terms of managing the NCB group or supervising the NCB group. We also participate in regulatory colleges for those institutions who their home regulators are in other places, for example, in Canada.
Sorry, I wasn't calling him, but for argument's sake, like you have a JMMB financial group, which has operations in the DOMREP, looking
Yes.
to go to, I'm not talking about like NCB, which has Garden as one of its related entities in operating from Trinidad, and so has a different regulatory environment there, and the cooperation that you as a regulator would have with the Trinidadian regulators. What about those who are not of a similar, what do you call it again, the British common law, which we share with Trinidad? And so it's either, what about entities like the JMB, which has operations in the DR and looking to go to Costa Rica? How do you cooperate with those regulators so that no contagion risk from one of their subsidiaries in another country doesn't come back to affect the mother company that is based here in Jamaica?
Okay.
And not only that, but also other regulators, other not regulators, other entities, like for example, say Cornerstone, which has its headquarters now in Barbados, and to be reorganized as a financial holding company because of its merchant bank, but its headquarters is said to be based down there in Barbados, but its main operation is here in Jamaica.
All right, I'm going to take you back to the Banking Services Act, right? Once a financial entity operates in Jamaica and there's more than one of them in Jamaica, they're required to have a financial holding company in Jamaica that is responsible for managing the group. You mentioned JMMB. That entity is headquartered in Jamaica. So Bank of Jamaica is responsible for the supervision of the entire group, wherever in the world that group is or that group has subsidiaries. So the regulatory cooperation becomes extremely important for those groups. You mentioned where the jurisprudence is different. Commercial law is commercial law, and where we need to get expertise to help us in supervising risks that are outside of Jamaica, that expertise is available to us, and we can always call on that expertise to help us. But Jamaica has that responsibility. Further, if as regulator, home regulator, we believe that we do not have the competency to regulate the risks within that group, there is a requirement for that group to get rid of that or to close those operations that we do not have the capability to regulate. Further, before they can expand to other jurisdictions, they have to meet, they need to get the approval of the Bank of Jamaica as home regulator before they can establish in those jurisdictions. So there is a whole process of approval, including supervisory cooperation and how that entity is going to be regulated within the jurisdiction that they're establishing. Right? The standards for conglomerate and consolidated supervision is clear. There's a whole history behind countries doing that. For example, Citibank operates in most countries in the world. The Fed is their home regulator, and there is supervisory cooperation right across all the jurisdictions in which they operate. Same with Scotiabank, for example. We participate in regulatory colleges in Toronto, where OSFI hosts those colleges, and it has all the regulators from all over the world, from the jurisdictions within which those entities operate. Issues are discussed, concerns are raised, and if there are requirements or regulatory actions that need to be taken, those are discussed and those are taken. So as home regulator, there is a huge responsibility on the home regulator to ensure that the entities that are domiciled within their jurisdiction, that those entities are appropriately supervised. You mentioned Cornerstone. Cornerstone is in keeping with the Banking Services Act. They will have to reorganize to meet the consolidated supervision requirements. If the financial holding company is in Jamaica, and if that is in Jamaica, then Jamaica is home regulator. One of the requirements for any financial group is for them to be organized in a supervisable structure. That's a condition of their license, right? So if they're not now appropriately structured, they will have to reorganize to satisfy the criteria under the Banking Services Act in how they're organized to be appropriately regulated and supervised.
Very last question from me on this, and I give it up. You mentioned if there are entities which you believe the BOJ cannot adequately regulate, or supervise, then you say to the whole income, you probably have to get rid of that. Sorry, sorry. I lost my train of thought there. But but basically,
yeah, entities. You were saying that entities that the
that you believe, if you say, if you look and say, okay, we can't give adequate regulation to it. I'm trying to interpret correctly.
Yes.
You'd say to them, probably you'd have to divest that off because we can. What are those entities that you would look and say, hey, and have you done it in the past to say, hey, we can't regulate that, so you have to divest it? And second, looking at the NCB, our largest financial conglomerate in the country, if my memory serves me right, and I'm going from memory and I stand to be corrected, they have roughly about $1 trillion in terms of assets. The entire the banking sector in Jamaica, the financial sector, I think is about 2 trillion, if my memory serves me right. That's roughly half of the thing, even though it includes Guardian, which is not based here though. But how do you regulate such a behemoth, really? If that one should come down, the whole country come down, really.
You know, that is one of the reasons why we talk about a special resolution regime and why we talk about the need for entities to have a plan to be able to resolve that entity if they feel that it is too big or too risky. There are requirements for them to manage those risks or to divest themselves of those risks if they feel that it is unresolvable. So part of the framework that we are working on is the resolvability test, and entities will have to develop their own resolvability plans and indicate to the central bank how they would resolve their issues should those issues become too problematic to manage. So that's the framework we're working on. That's the special resolution regime. So it starts with a group that is supervisable, a group that is resolvable, and the groups themselves putting together resolvability plans that are shared with the regulator and that are approved by the regulator and that are updated frequently. That's the framework that we are currently working on putting in place. So you have put your hand on it. It's the kind of risk that the IMF is pointing to, that the country needs to better manage, both from the private sector and from the regulator's perspective, putting that framework in place as quickly as possible and ensure that it is effectively implemented.
Maureen, we're going to have a special press briefing on this issue for you and Dasha.
I think so.
I know he has a lot more questions here.
Yes.
I said that was the last one. If anything, I'll put through a call to get more clarification.
Sure.
I yield.
Thanks for your interest, Dasha.
Thank you. Huntley, do you have another question?
Sorry.
Yes.
Oh.
Go ahead,
Huntley.
All right. Thanks. I don't want to delay, but since Dashan has taken us so far off the monetary policy debate, I just wanted to, good morning, everyone. I just wanted to see if I could get a quick comment from the central bank on another issue that was raised by the IMF. And I know the central bank has been doing work on it, is the AML CFT regime and the need that they're calling for further strengthening of the anti-money laundering regime so that we could get off the FATF grade listing. I know there are issues, some issues related to the court case with the lawyers, but there are emerging issues, particularly in real estate and the expansion of real estate, especially as it relates to developers. Is there any comment that the central bank can make on that issue?
Yes, Maureen.
Thank you, Governor. You want me to comment on which one? You've made us a number of statements. You want me to comment on the real estate? Which is the one you want me to comment on?
I'd really love if you could comment on the real estate and, if possible, on any other outstanding issue to get us in conformity with the FATF regime.
Okay. At earlier press conferences, we discussed the action plan that Jamaica has agreed with the FATF. That action plan has a timeline that ends in January 2022. There were 13 action items on that action plan, and a number of them have already been completed or far advanced near completion. There are a couple that are sticky and that may need additional time beyond January 2022 to complete. And I refer, for example, to the amendments to the Companies Act, which may take a longer period of time than January to complete those amendments. But by far, we are advanced in most of the items on that action list, most of the 13 items. A key one was the National Risk Assessment that we completed in August, and that is published on Bank of Jamaica's website, as well as the Finance Ministry's website, and a couple of other websites as well. So it's a good read, and you should take a read of the National Risk Assessment. That body of work allowed us to better understand Jamaica's AML CFT risks and context. And one of the outcomes of that risk assessment was the risk that we see emanating from the real estate sector. Now, I don't know, you may know that real estate dealers are regulated. However, developers are not under the framework. And we saw risks emanating from that sector, primarily around opacity or a lack of transparency around the funding for real estate developments, right? The data to analyze or to assess how most of those developments were being done was not readily available. And so because of that and the nature of money laundering, because real estate is a high value asset, we need to do more work in Jamaica to better understand the risks around real estate development and to put in place mitigants to address those risks, right? That means that we'll have to meet with the various ministries and agencies that are involved in that process, and we need to come up with, for want of a better word, a white paper or a concept paper as to how best to treat with that particular risk that we see emanating from the real estate sector, specifically in the development side of those operations. I know the minister has been apprised. I know the minister would have written to the appropriate ministry of Housing, that minister there, and I know that a meeting is being planned with all the stakeholders to discuss the matter and and come up with recommendations as to how best to address the issues that we see arising from that sector. In relation to the lawyers, I do know that the government has appealed to the Privy Council, and I think that appeal is set to be heard sometime next year in 2022, possibly around mid-2022. And that is all we can say in relation to that, in relation to the lawyers, because then we would have to wait on the ruling of the Privy Council as it relates to bringing them under the framework.
Thank you very much.
Thank you, Ms. Sims. Mr. Collister, did you have a last question?
Yes. I was just really trying to get your view as to how much importance, if any, you attach to the fact that Jamaica seems to be running one of the tightest fiscal policies in the world and hasn't actually given the level of support that many other countries, including emerging market countries have done. And also when the crisis began, there was a sort of conversation with the banking sector and private sector about the need for a partnership approach, and the view was that the banking sector could support the business and without much support from the central government directly. Now, the Bank of Jamaica certainly played its part in terms of very sharp liquidity provision at that time. I think I think I've seen a statistic of 16% of GDP, which might be, I need to check that if that is the correct statistic. But it seems as though what we're saying is that's coming to an end. And the question I'm getting at is this, are we a little early in hoping that the pandemic, in the same way that maybe people have been early in hoping that the inflation is transitory? Are we a little early in calling? Many people didn't think that the COVID pandemic would last this long. So are a little early in terms of reversing that partnership, if you like. So those are two related questions.
Keith, the partnership between who?
When I say it's not a formal partnership, what I was saying is that there was definitely encouragement of the banking sector to provide the support to those businesses that were affected by the pandemic. Yes. And that, if you like, you provided that fuel for that partnership, informal partnership, I could call it, with your support.
Right.
So you must have an assessment of the where we are. I mean, you made, yeah.
I got you. So yes, the DTIs, the commercial banking sector, made payment accommodations to their borrowers, the private sector. And that lasted, I think we began to lift that in about, was it June of this year or a little earlier, about maybe June. And on the basis that the domestic economy was recovering and most of those loans were businesses were now able to service them, or they were restructured and set on a path to be serviceable. Also, to the extent that a large set of those loans were tourism loans, or loans to the tourism sector, and we knew that that sector was coming back strongly, but it needed a little bit more time. So we accommodated that by allowing the banks to be more flexible with those loans. The key is to make the assessment that the loans and the industry within which they sit are viable, and what it requires is a little patience for the economy to come back and they will become good again. And that is the principle that we applied in determining, and the banks applied in determining whether a loan would be considered performing or considered to be non-performing. Wayne, I don't know if you might want to jump in and say something in addition on that.
No, Governor. I think we have been seeing the recovery in a number of sectors, and we note that the banks have been continue to work with individual sectors in terms of managing their loans and restructuring their loans. So we continue to monitor how that is happening. We continue to monitor closely the performance of the loan book, the quality of the loan book, and the prospects for those loans as well.
Thank you, Dr. Robinson, and thank you, ladies and gentlemen, for your questions. Please
Can I
note
get
that
a
the
quick question in? One
that-
quick question.
all right, go ahead.
Yes, Governor, I just want to take you back to the top of your presentation. You mentioned about the curfew, and I would imagine that as we come into the run into Christmas, you should probably see some more commercial activity, more inflows. But how concerned are you about there's talk of a possible fourth wave? I mean, if you look across the world now, you're seeing an increase in infections, particularly in Europe, UK, Germany, Belgium, Russia, particularly. There's an increase also in the US. Now, if this fourth wave comes, it comes right smack bang and possibly in the middle of the tourism season, which looks pretty healthy. I don't know, how concerned are you about this?
Well, I'm as concerned as every well-thinking Jamaican should be. You know, even though we have had this relaxation, and even though we have more of the population that is vaccinated, we have to still take precautionary measures. In Bank of Jamaica, people who attend office is the minority of our staff. We observe social distancing. And that's how it should be in the society, wider society. We can't use this break that we have to create conditions that set us right back to where we're coming. Let's wear the mask, let us social distance. That's the right thing to do. And we'll find that we'll get through this period very well.
Okay.
Thank you, Governor, and thank you, ladies and gentlemen, for your questions. The audio file will be shared with you after the briefing, and the Governor's presentation will be posted to the website. Stay safe, and thank you for joining us.
Thank you all, everyone.
Bye now.
Thank you.